Accounting standards for departmental exam, in-service exams, PSC exams, UPSC exams, UGC NET exam, degree PG level exams, and various other exams. Accounting standards are issued by the Accounting Standard Board. The Institute of Chartered Accounts of India, ICAI, constituted the Accounting Standard Board, that is ASB, in 1977. Indian accounting standards are the modified version of International Financial Reporting Standards, that is IFRS. List of accounting standards. 1. AS1, disclosure of accounting policies. AS2, valuation of inventories, that is closing stock. As per Accounting Standard 2, closing stock is valued at cost price or market price, whichever is less. AS3, cash flow statement. AS4, contingencies and events occurring after the balance sheet date. AS5, net profit or loss for the period, prior period items and changes in accounting policies. AX6, that is AX6 depreciation, that is abolished in 2016 and that incorporated in AS10. AS6 incorporated in AS10, that is depreciation incorporated in AS10. Accounting Standard 7, accounting for construction contracts. AS8, that is research and development, that AS8 abolished in 2016 and incorporated in AS26. That is AS26 contains research and development. AS7, accounting for construction contracts. AS9, revenue recognition. AS10, property, plant and equipment plus depreciation, that is AS6 incorporated. AS11, the effect of changes in foreign exchange rates. AS12, accounting for government grants. AS13, accounting for investments. AS14, accounting for amalgamations. AS15, employee benefits. AS16, borrowing cost. AS17, segment reporting. AS18, related party disclosures. AS19, leases. AS20, earning per share. AS21, consolidated financial statements. AS22, accounting for taxes on income. AS23, accounting for investments in associates in consolidated financial statements. AS24, discontinuing operations. AS25, interim financial reporting. AS26, intangible assets plus AS8, earlier abolished AS8 that included in AS26. That is AS26 is intangible assets plus research and development. AS27, financial reporting of interest in joint ventures. AS28, impairment of assets. AS29, provisions, contingent liabilities and contingent assets. I repeat, AS1, disclosure of accounting policies. AS2, valuation of inventories. AS3, that is Accounting Standard 3, cash flow statements. AS4, contingencies and events occurring after the balance sheet date. AS5, net profit or net loss for the period, prior period items and changes in accounting policies. AS7, accounting for construction contracts. AS9, revenue recognition. AS10, property, plant and equipment. AS11, the effects of changes in foreign exchange rates. AS12, accounting for government grants. AS13, accounting for investments. AS14, accounting for amalgamation. AS15, employee benefits. AS16, borrowing cost. AS17, segment reporting. AS18, related party disclosures. AS19, leases. AS20, earning per share. AS21, consolidated financial statements. AS22, accounting for taxes on income. AS23, accounting for investments in associates in consolidated financial statements. AS24, discontinuing operations. AS25, interim financial reporting. AS26, intangible assets. AS27, financial reporting for interest in joint ventures. AS28, impairment of assets. AS29, provisions, contingent liabilities, and contingent assets. AS1, disclosure of accounting policies. AS1, disclosure of accounting policies. All significant accounting policies should be disclosed. Such disclosure form part of financial statements. AS2, valuation of inventories. Inventories should be valued at the lower of cost and net realizable value. That is, closing stock is valued at cost price or market price, whichever is less. AS3, cash flow statement. Cash flows are inflows and outflows of cash and cash equivalents. Cash flow statement represents the cash flow during the specified period by operating, investing, and financing activities. AS4, contingencies and events occurring after the balance sheet date. Events occurring after the balance sheet date are that occur between the balance sheet date and the date on which the financial statements are approved by the board of directors in the case of a company. S5, net profit or loss for the prior period items and changes in accounting. These standards requires the classification and disclosure of extraordinary and prior period items and the disclosure of certain items within profit or loss from ordinary activities. A7, construction contracts. This standards prescribes the accounting treatment of revenue cost associated with construction contracts. A9, revenue recognition. The standard is concerned with the recognition of revenue arising in the course of the ordinary activities of the enterprise. AS10, property, plant and equipment. Tangible items are deals in property, plant and equipment. Depreciation also deals in these standards. In this standard AS10. AS11, the effects of changes in foreign exchange rates. It deals foreign exchange in two ways. It may have transactions in foreign currencies or it may have foreign operations. AS12, accounting for government grants. Government grants such as subsidies, cash incentives, duty drawbacks, etc. are assistance by government in cash or kind to an enterprise for past or future compliance with certain conditions. AS13, accounting for investment. Investments are assets held by an enterprise for earning income by way of dividends, interest, and rentals, for capital appreciation, or for other benefits to the investing enterprise. AS14, accounting for amalgamation. According to this standard, amalgamation means an amalgamation pursuant to the provisions of the Companies Act 1956 or any other state statute which may be applicable to companies. An amalgamation may be either an amalgamation in the nature of merger or an amalgamation in the nature of purchase. Age 15. Employee benefit. Employee benefits are all forms of consideration given by an enterprise in exchange for service rendered by employees. Age 16. Borrowing cost. Borrowing costs are interest and other costs incurred by an enterprise in connection with the borrowing of funds. Age 17. Segment reporting. The objectives of this standard is to establish principles for reporting financial information about the different types of products and services an enterprise produces and the different geographical areas in which it operates. Age 18. Related party disclosure. This standard should be applied in reporting related party relationships and transactions between a reporting enterprise and its related parties. Age 19. Leases. It deals to finance leases and operating leases. The standard should be applied in accounting for all leases other than lease lease agreements to explore or use natural resources such as oil, gas, timber, metals, and other mineral rights, and licensing agreements for items such as motion pictures, film, video recordings, plays, manuscripts, patent and copyrights, and lease agreements to use lands. Age 20. Earning per share. It prescribes principles for the determination and presentation of earnings per share, which will improve comparison of performance among different enterprises for the same period and among different accounting periods for the same enterprise. The focus of this standard is on the denominator of the earnings per share calculation. Age 21. Consolidated financial statements. Consolidated financial statements are presented by a patent, also known as holding enterprises, to provide financial information about the economic activities of its group. Age 22. Accounting for taxes on income. Taxes on income is one of the significant items in the statement of profit and loss of an enterprise. In accordance with the matching concepts, taxes on incomes are accrued in the same period as the revenue and expenses to which they relate. As 24. Discontinuing efforts. The objective of this standard is to establish principles for reporting information about discontinuing operations, thereby enhancing the ability of users of financial statements to make projections of an enterprise's cash flow, earnings generating capacity, and financial positions by segregating information about discontinuing operations from information about continuing operations. Age 25. Interim financial reporting. Timely and reliable interim financial reporting improves the ability of investors, creditors, and others to understand an enterprise's capacity to generate earnings and cash flows, its financial condition, and industry. Age 26. Intangible assets. The objective of this standard is to prescribe the accounting treatment for intangible assets that are not dealt with specially in another accounting standard. Age 27. Financial reporting of interest in joint ventures. The objective of this standard is to set out principles and procedures for accounting for interest in joint ventures and reporting of joint ventures assets, liabilities, income, and expense in the financial statements of ventures and investors. Age 28. Impairment of assets. It deals with the procedures that an enterprise applies to ensure that its assets are carried at no more than their recoverable amount. If this is the case, the asset is described as impaired, and this standard requires the enterprise to recognize an impairment cost. AS29 provisions contingent liabilities and contingent assets. The objective of this standard is to ensure that appropriate recognition criteria and measurement bases are applied to provisions and contingent liabilities, and that sufficient information is disclosed in the notes to the financial statements to enable users to understand their nature, timing, and amount. Thank you.